Is a reverse mortgage a ripoff? Well, in my opinion, no. But you know what they say about opinion. And especially it's true in this day and age where you can buy just about anything online, and a lot of times what you get isn't what you thought you were going to get. It was a lot different when I was a kid. You know, there were only a few things you could buy online. You could buy Record of the Month Club, pretty sure what you were going to get. You could pore over the Christmas Wish book, which came out from Sears every year, and look at all the stuff, and usually it was pretty accurate. And then you had stuff that you could buy from the back of a comic book, and well, let's face it, anybody ordered those glasses that supposedly spies used so they could see through concrete walls? Well, they didn't work. And what a letdown, right? So let's be honest. If you've ever Googled reverse mortgages, you've probably seen the headline like these. And I get it. The words reverse and mortgage together, they don't exactly scream confidence. You've worked hard to build your equity, and the idea of borrowing against it in retirement might sound risky or even wrong. But let's also face it, if you're watching this video, maybe you're looking for ways to make ends meet, and you're wondering, are they worth it? Are they a ripoff? And so what you have to do is look at the fact, and that's what we're going to do in today's video. The fact is that people don't mind paying whatever the price is on something as long as they're getting really great value for what they're paying. Sometimes reverse mortgages are actually cheaper than other mortgages, and sometimes they're not. But what you have to look at is, what are you getting for your money, and is it good value? So today we're going to answer the question head on: is a reverse mortgage a ripoff, or is it one of the most misunderstood financial tools in Canada? Hi, I'm Peter Fabry, founder of Rewind Mortgage, a division of Broker It, my licensed brokerage. I've been brokering for over 25 years, specializing in alternative lending and helping Canadians, especially those over 55, understand their financing options, especially in today's economy. If you'd like to see all my licensing or background, it's in the description below and on the website. So now let's separate the fear from the fact, because if you've ever wondered who actually benefits from a reverse mortgage, the answer might surprise you. So where's the idea of the ripoff come from? Let's start where the skepticism comes from. For years, the term reverse mortgage was misunderstood even by professionals, even by mortgage professionals. When it came out years ago, I was skeptical. People heard stories of seniors losing their homes, or heirs getting less inheritance, or interest rates that seemed unfair. The problem, most of those stories came from the US, not from Canada. And Canada reverse mortgages are heavily regulated. In fact, the number one and the original reverse mortgage company in Canada, Chip Home Equity Bank, is owned by the Ontario Teachers Pension Fund, the third largest pension fund in Canada. So that alone should give you a little bit of confidence in who else believes in this product and whether they think it's a scam. You never lose ownership of your home, you never owe more than the home is worth, and you can live there for as long as you want. Those are legal protections built right into the product. But fear sells and gets more clicks than facts, right? So how do reverse mortgages actually work? Here's the truth. A reverse mortgage is simply a loan secured by your home, just like any other mortgage. But instead of making payments, the interest can be added to the balance, or you can pay the interest monthly. It's up to you. You can access up to 55% of your home's value, depending on your age, your postal code, the property type, etc. You continue to own your home, stay on title, you don't make monthly payments unless you want to, and people always miss that part. The insurance policy. You don't have to move or make a payment as long as you live in your home. So anyways, the loan is paid when you sell or move out, and it's tax-free. It doesn't affect your OAS or your CPP or any other kind of benefit that you might be receiving, because it's a borrowing. All borrowings are exempt income tax in Canada because it's not income. So in short, it's equity conversion. It's not debt dependency. Here's the real cost. Let's talk about the cost. The part that makes people think it's a ripoff. Yes, sometimes reverse mortgage interest rates are higher than traditional mortgages, usually by 1 or 2% historically, but let's look at what that means in real terms and what you get for it. As for home equity lines of credit, as a comparison, they're actually pretty comparable in terms of rates over the last little while. And sometimes reverse mortgages have actually been cheaper than home equity lines of credit if we're looking at just the rate. Right now in October 2025, there are lots of mortgage rate specials on, and it's actually possible to get a reverse mortgage rate for much lower than the rate of interest on a line of credit. But for purpose of argument's sake, and for an example, let's just say the rate on the reverse mortgage is 1% higher than a home equity line of credit. Let's say it's 8%. And you can get a HELOC for 7%. Those are not current rates. That's just the rates that I'm using for this example. If you borrow $150,000 at 8%, the balance grows about $12,000 a year. But remember, you're not making payments. And your entire home's value is also appreciating. So if your home increases by even, let's say, 3% a year, your equity often stays roughly the same as the loan, or even grows despite the loan. So no, it's not a free product, but it's also not a trick. It's just a cash flow strategy that trades some of your future equity for peace of mind and ability to keep up with the cost of living today. So who's it for? Reverse mortgages are not for everyone, and that's why I take the time to carefully explain them in these videos or when we talk on the phone or in a Zoom call or in person. They're ideal for homeowners 55 or older who want to stay in their home, reduce their financial stress, and let's face it, what does CPP and OAS really cover nowadays? Food, utilities, like not much. It helps you reduce your financial stress and cover costs like renovations or stay-in-home renovations, healthcare, debt consolidation, getting rid of high-interest credit cards or lines of credit or car loans. They're not always ideal if you plan to move soon or if you have ample savings. In other words, if you're house rich and cash poor, it's a great tool. It's not a trap. So let's do a real client example. Let me tell you about Margaret, a 74-year-old widow whose son called after she told him she was considering a reverse mortgage. And he was frustrated because every article he'd ever read online said reverse mortgages are scams. She had $500,000 of equity, but only $25,000 in savings. Her income was fixed and covering bills, but not her rising care costs. She chose a reverse mortgage for $150,000, no payments. Her monthly stress disappeared. Her son later said, "I can't believe it. It's almost like," her son called later and said, "I can't believe it. I almost let rumors stop us from doing this." That's the reality people struggle with until they actually do the math or see the math. So here's what banks will not tell you. And this is part of the confusion and actually adds to the conspiracy theories and the rumors around reverse mortgages. Okay, so here's what banks will not tell you. Most people don't realize that major banks in Canada do not offer reverse mortgages directly. They would much prefer to sell you one of their own products because, of course, there's money in it, right? Duh. Usually HELOCs because you keep making payments and people have a tendency to keep racking it up, so it's good for their bottom line. I know. I'm a former bank director of regulatory compliance, but still, nonetheless, a bank director, making sure mortgage agents played by the rules and make no mistake. The job gave me a bird's eye view of where the bank's priorities are. They're always looking to deepen their relationship with you, means making more money off of you. So sometimes the rip-off label isn't about the product, it's about the competition. The reverse mortgage industry has grown rapidly in Canada because it fills a gap that banks can't. If a bank ever discusses a reverse mortgage with you, you have to understand that not only are they not experts on reverse mortgages, but if they do refer you to, let's say, one of the 3 lenders that offer reverse mortgages, they're just getting a small referral fee for doing so. So let's make no mistake. If a bank is referring you to one of the reverse mortgage lenders in Canada, they're just referring you to one lender. You're not getting a comparison of whether they've got the right product for you. And what they're getting out of it is a small referral fee for sending you over to a bank that can actually do a reverse mortgage. So let's talk about some common misconceptions. We'll bust a few myths quickly. Myth number 1, you lose your home. False. You stay on title as the owner. Myth number 2, the bank is going to take all of your equity, right? False. You or your heirs get to keep what's left of your equity after the mortgage is repaid, just like if you had any other mortgage when you pass away. Myth number 3, you can outlive the loan. False. That's the best part of a reverse mortgage. You get to stay in your home and you never have to make a payment as long as you're alive and you live in your home. Guaranteed. Myth number 4, it's only for people who are in trouble. False. Many people use it strategically for investing, for renovating, or gifting early inheritance to their kids, or paying for education for children or grandchildren. Strategic tool. It's a use of your money. It's no different than if you pulled money out of your investments to use it for something that's important to you and your family. It's your equity and your asset. So I want to hear from you before you listen to any more. What's the first impression of reverse mortgages that you had before watching this video or any other videos or reading about them? Was it a good idea or a bad idea or a ripoff? Type it in the comments. I'm genuinely curious to know how you felt before you started understanding the facts. So how do you know if a reverse mortgage is right for you? Well, here's my quick test. You're 55 or older and you want to stay in your home for the long term. You want to eliminate monthly debt payments and improve your cash flow. You're okay with trading a portion of your future equity for freedom today and security today. If you check those three boxes, it's not a ripoff. It's a release of your own equity for something that's important to you. So let's do a little bit of a recap. We've separated the myth from the math. Reverse mortgages are not scams. They're government regulated, lender insured, and they're used by hundreds of thousands of Canadians responsibly every year. Hundreds of thousands, okay? Are they free? No. Are they risky when misunderstood? Yes. If you aren't explained properly how they work, that's a risk. But that's why you get independent legal advice from a lawyer of your choice prior to signing any mortgage document. The lender will make sure that you speak to a lawyer to understand what you're signing so that you feel good about the product. And let's face it, sales would not be going up. More Canadians would not be turning to reverse mortgages if they were a ripoff, because people talk. Any of these myths that you've heard about reverse mortgage are bad are not coming from Canadians that have them, because 99% of people that get reverse mortgages continue to see their equity preserved or grow over time, and it fills a need. They want to stay in their home, but it gets harder and harder to afford that, or even afford the upkeep. So if you want to see what a reverse mortgage would look like for your home and for you, how much you'd qualify, how your interest grows, how much is left for your estate, visit rewindmortgage.ca, contact me privately, or you can download the free guide. I'm Peter Fabry with Rewind Mortgage, a division of Brokerit. Thank you so much for watching, and remember, the best financial decisions are made with facts, not fear. Bye for now. Stay tuned for the next video. If you like this video, please do hit like or subscribe. Bye for now.